All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what I want to do is I want to dive into my $7,500 portfolio. Basically, in this video, what I want to do is I want to cover how my portfolio is kind of done over the past month. We're going to look at my portfolio, the holdings. Obviously, I got a lot in red here, so we got a lot to discuss. But what I want to do basically is I want to make a little comment on each stock. And I have the Yahoo Finance charts of some of the stocks that have had kind of little run-ups or little things about them that I want to discuss in this video about my portfolio. I'm also going to discuss my payout calendar and my payout calendar going forward for the month of December. So we're going to get into my December dividends. But today's just going to be an honest video from Honorable Investing because I just want to share with you guys my thoughts on my current portfolio, maybe some purchases that I might look to make or some stocks I might look to get rid of. So in this video, before we get into that, we're up to 3,460 subscribers, our little subscriber check. Last video did amazing. Our last three videos are all top 3 out of the top 10. So I want to say thank you to everyone who's watching the videos, subscribing, and enjoying. So today we're talking about my portfolio. I love to show you the 1 month chart, but unfortunately, the dividend tracker here is doing something weird, so I'll go back to the 3 month chart. You can see here if I zoom in that I purchased about $1,000 worth of clip, and that's why you see this kind of flat period and then this big run up here. That was really the only kind of purchase that I made in the month of November was clip here. I bought 41 shares, and I actually just made a video about that not too long ago as well. But starting off, our first position here, Zim. Zim is a stock that I know a lot of people might have held and maybe sold out of because it did so poorly. I'm currently down about 76%. As you can see, I have 26 shares. An average share per cost about $29 or so. And I'm still holding my shares because I am long Zim. I do think long term they're going to be okay. They just got some things to figure out in the short term going off of 2024 and leading into 2025 is when I think they should rebound. WBA. Walgreens Boots Alliance. I hold 11 shares at an average share price of about $41.64. Look at this, their share price close to $20. And I actually have Walgreens up. And I know a lot of people were concerned about Walgreens looking at their financials, earnings per share, but this is a stock that I do potentially want to get rid of. And it's not necessarily that I think it's a bad company. I think they're a pharmacy. I think they're almost like a necessity business, but what I would say is there's a lot of negative sentiment around Walgreens, but their financials, in my opinion, are still doing okay. Now, you see, obviously, the net income loss. What I do want to show you here is on the cash statement of cash flow, you can see an annual net income loss of about $3 million. But when we zoom into the quarterly results, we see that was one quarter about 3 quarters ago. Their net income is negative $180 million, but their net cash provided by operation was over $1 million, which is great, which is good to see. And the free cash flow sitting at $500 million for the last quarter. Now, going to their balance sheet, we can see they're not really taking too much off their balance sheet, even going to their quarterly results here. Still about $96 billion right there, versus their total liabilities of $86 billion. So a $30 billion spread when we have a market cap of only about $17 billion, literally half that. So I'm still holding on to WBA, but that's a position I might look to trim. MPW is another one that I've just kind of held my shares, 115 shares, average cost basis, just under $9 right there. And that's another stock that I do think, although battling short-term wins like Zim, I think long-term they will be okay. They are a hospital player. Hospitals are a necessity. They are a needed area of our society. And so I'm cool holding on to Zim as they are the second largest private owner of hospitals in the world. Now, 3M. 3M is an interesting stock because 3M had some big dilemmas with their earbuds, and that obviously led the stock price to drastically fall over the past year. We could see, like, although the dividend tracker doesn't show their max price history going back 50 years, over the last couple years, we could see a sharp decline, or rather, actually a steady decline down, and a little bit of a rebound coming back in. Now, I'm not sure if this rebound is going to hit $100 and then go right back down, but I only hold 3 shares, not a huge position, down 25%. My average purchase price is about $130, so I'm down about $30 per share. But 3M is a company, once again, they have so many underlying businesses. I don't see necessarily a sign to hold them, or sorry, to sell them. So I will continue to hold. And with a dividend yield of 6%, I think they are a solid long-term holding. And they are a dividend. I'm pretty sure they are a dividend king. They've been paying out their dividends a long time. Definitely a dividend aristocrat, which I like to see. Now, our next one, TSOY, the all-anticipated TSOY. We got 100 shares, down actually 18% on this position. With the current share price of $11.81, my average share price of $14.51, currently our second highest dividend yield sitting close to 60%. But this is a stock that I've been buying over the past year. Obviously, you guys have watched my channel. You guys know that. It is a pretty volatile and pretty risky stock, I would say. And I'm kind of debating my whole kind of thesis around TSOY, because although it's a fun stock to invest in, and going to my monthly payout calendar, it provides a bulk of my monthly income. Just going here, we can see. So it provides me with about $60 every single month out of this $192. But I'm wondering whether or not it is sustainable for the long term, just due to the fact that Tesla, the underlying stock for TSOY, is so volatile that it might be a little bit too volatile. And although the premiums are great, I'm just wondering if it will lose too much in its share price appreciation. We're definitely going to see that over the next little while, so I'll keep you guys updated. Next, the stock that I actually have a chart of is AT&T. So AT&T right here, the reason why I have it up, a lot of people doubted AT&T. I have 36 shares. I bought it way back when for about $18.89. I'm down 13%, and it's been coming back for the past 3 months or so. It's been in a steady uptrend, and I'm pretty sure a bunch of the wireless and like phone services stocks like Verizon, for example, which is their competitor, have also been doing very well, or even Dell, I'm pretty sure as well. But AT&T has been doing pretty well as of recently. I'd love to get it back to this purchase price of $18.89, but this is a stock that I continue to hold. A lot of people doubted AT&T, still paying roughly a 70% dividend, and the financials are actually pretty decent on the stock. I'm just going to go to their cash flow to make it super quick. You can see that their net cash provided by operations down here is about $10 billion for the quarter, so doing great, growing over the past couple quarters, which we like to see. Their net income is about the same, and their free cash flow is still steady at $5.6 billion. And they are reinvesting back into the business. All great signs. They did have a pretty big down quarter, $23 billion. I'm not sure if that was due to the merger of Disney and AT&T or the spinoff, but I will have to look more into that. But the uptrend, just to note, potentially if you wanted to get into AT&T, it is a stock on a bull run right now, so that could pique your interest. Now, Clip needs no introductions to the Crane Shares China Internet and Cover Call Strategy ETF, and I have 145 shares. My biggest position, about 2.7K invested, and has a dividend yield of about 48%. Clip is the biggest monthly payer for my dividends, and it provides me with roughly about $100. Haven't crossed that triple digit marker yet, but about $98 of my monthly income, so a big payer right there. And that is a stock I've been currently added to, as I believe it's approaching an uptrend. Who knows if that's going to happen, but I am hopefully thinking that it will happen, potentially, but nothing's guaranteed in investing. USOY is a stock that I bought a long time ago. I got 2 shares. I bought it for $83.33. I actually bought it using a Zim dividend, believe it or not, when Zim was out paying dividends. And I bought the stock knowing that it's an ETN, and ETNs are very risky. I wanted to try out ETNs and see for myself. For the most part, it's actually performed pretty well. I could have sold here at $85, made a profit, and I would have made a profit as I've been collecting about 18% or so in dividends off of USOY, because USOY's dividend yield is roughly 26%. So my USOY position, I'm very happy with. I'm definitely up more than 10% just due to the dividends I've received, but it is risky being an ETN. ADC, a REIT that I bought a very long time ago. I still got 5 shares. Not much to talk about here. It's got a measly 5% dividend. So for a long-term stock, it is a good dividend. I'm down about 8.3%, but for the most part, I was mainly up on the stock. I have an average share purchase price of about $63, $64, something about there, and it's sitting at about $58.50 right now. QYLD is the next one. QYLD was a stock I was looking to actually potentially reinvest my Clip dividend into if Clip is going to pay on time, because QQQY actually pays at the start of the month, and its ex-dividend date is on December 1st, if I'm not mistaken. Now, going to my payout calendar here, you can see it's going to pay on the 8th. I'll receive $10 currently, but if I could reinvest my Clip dividends, I'll look to kind of get that up. Now, QQQY, it's kind of the same or similar to the Yield Max funds. I know they have a completely opposite strategy, as you guys have let me know in the comments. I want to say thank you to everyone who's commented and, obviously educated me, but also just like our viewers, as we work as a team here to build great portfolios. Now, QQY, they do a 0 DTE, 0 date to expiry option contracts. I'm not sure. I'm pretty sure they sell puts. But I have 10 shares of that at an average share price of about $19.64. Currently down about 5%. The dividends are outweighing that. But I'm wondering if I want to invest my own money, not my dividend income money, not this $192, back into QQY. It does have an amazing yield, but I want to look beyond the yields to make sure I'm making some great dividend investments. Now, the last three we're talking about, Stag. Actually, we'll talk about the last two, Stag and EPR. EPR is actually the first stock I ever owned. It's done very well over the past 6 months. It had a great rally and it's kind of sitting up top here. Same thing with Stag. That's why I don't have the price chart up. I have roughly 14 shares of Stag, 16 of EPR. They've both done great, about 2%, but I've been receiving a dividend from Stag, which is about 4%, and up about 6.5%, and receiving about an 8% dividend from EPR. Now, the last and final stock is Energy Transfer. I have a very small position of 15 shares, only at $11.76, so not a stock I have a lot of market value in, but I am up about 15%. Been receiving a 9%, a 10% dividend actually, and Energy Transfer, it's a pretty cool stock. It's an oil and gas company. They have oil and gas lines, and they're situated about the United States. And obviously a stock that's done very well for me. I knew this would be more so a long-term play with a high dividend yield. So that's something to bring to your attention. Now, going forward to the months ahead, and I want to say thank you guys for staying with me for so long. I know it's not a traditional video where I show you guys the charts and I go crazy through them, but it's more like a one-on-one video with you, so I want to say thank you for sticking around. Now, what we could do is, now that we have kind of November dividends out of the way, we're looking forward to December dividends. So obviously I have QQQY coming in the second week of December, and I got 3M, which is going to pay me about $4.50 currently. I have ADC with 1, 2, 3 right there. We have EPR, Stag Industrial, both been paying me for over years, to be honest, and they're very stable dividends. They've stayed the same or increased, which I love to see. TSOY coming in $60 right there, big dividend hitter, and that we know is roughly going to be actually they haven't announced their dividend for December yet, so that will be exciting to see. USOY generally stays about the same, about $3 or so you can expect something about there from that. And then Clip paying roughly about $100. Now, these numbers are obviously subject to change as I invest more of my money, increasing my monthly income and also reinvesting my money back into my portfolio that I receive from the high dividend payers such as QQY, TSOY, and Clip. But one thing I might look to do for the next little while for my portfolio is, because we're receiving now a decent amount in monthly income, it might be a good idea to once again start looking at more long-term stocks, potentially 3M, AT&T, but go way beyond the portfolio, way beyond what you see here, and go into some real dividend kings and aristocrats. I'm not sure if you guys would find that the most exciting. Just let me know. I know you guys like the coverage of TSOY and Clip, but I think investing in some long-term plays using TSOY and using Clip might be kind of fun to invest in some long-term plays, really rack up our cash flow for the long term, and just see how we can boost our portfolio for the long term, because we are investing for the future. And the long term is the future. So what I want to say with that is thank you for sticking around and kind of diving into my $7,500 portfolio. I don't say that to flex. I say that just to kind of obviously show you the value of my portfolio. Do you really think I'm flexing here with all of this? Do you think I want to flex all of this? The negative 76% loss? Okay. So I just want to say thank you to everyone who's sticking with me and enjoying the videos. We'll have more videos to come on obviously our high dividend yielding stocks and whatnot. So please do stick around. Enjoy the dividends with me. Subscribe if you haven't yet done so. I want to say thank you for being here, and I will see you guys in the next one.